Hello viewers, we'll be going over gold and silver futures. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for gold and silver futures. So back to the technical analysis for gold, we're currently down 15 basis points, and on the 1 hour chart, we have now reached to negative MACD after touching oversold, or I should say overbought RSI. As for the 4 hour chart, we were at overbought RSI as well, and we start to see a divergence on the 4 hour MACD. If we extend that further onto the daily chart, we still have a healthy MACD and we have no signs of it diverging, and at the moment we could see a possible resistance for gold being at around the range of $1,795. And as for support, if it does continue to move lower, the 18-day moving average, this purple line, being as our next possible support. Reason why, we have previous resistance level around that range, and since we're above resistance, that now act as our support. So that range is around $1,738. So now let's head back to the day-by-day probability model. Again, these models are now available in the link below, so do check it out. So as we progress to the 7th day, and again, we have a small sample size of 2 models found, so this is not statistically significant, so do keep that in mind. And if we progress to the 7th day, we have a 50% chance for gold futures to climb higher between 1.5% to 3%. And on the other side, to the downside, we have a 50% chance for gold futures to fall between 0 to negative 1.5%. So now let's head to the day-by-day forecast for gold futures. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue line is our current trend, and overlapping it happens to be the best match. So right here we have our current trend, and below is the trend that we found on the line graph. And this trend dates back to January 29th to April 26th, 2016. So let's begin comparing both trends. So we average above the middle Bollinger Band on the first quarter, and then we proceeded to see sideways price action touch the bottom band, and then we proceeded to touch the upper Bollinger Band. And now in the trend in question, we average above the middle Bollinger Band, and then we see sideways action to touch the bottom band, and then towards the very end we touch the upper Bollinger Band. So what we have here is 1, 2, 3 points. We also have 1, 2, 3 points on the current trend, so there's reason to believe that the trends and patterns are somewhat the same. The trend and forecast should be fairly the same. So the model that we just examined, again, it was back in January 29th to April 26, 2016. Back then, gold futures was up around 2.8%. So if we head back to the day-by-day probability model, that coincides with this standard deviation of a 50% chance between 1.5% to 3%. And let's examine closer on the technical performance of each model. On the current trend that we're in, we're only 35 basis points from monthly high, up 11% from monthly low, up 1.4% from 10-cent moving average, up 2% from 20-day simple moving average, and up 2.5% from 50-day simple moving average. And if we examine the trend that we just found, back then it was down 2% from monthly high, up 9% from monthly low, up 23 basis points from 10 simple moving average, and up 43 basis points from 20-day simple moving average, and same with up 31 basis points with 50-day simple moving average. So now let's examine silver futures. So we'll start with the technical analysis. Silver is currently down 59 basis points, and on the 1 hour chart, we are now nearing oversold RSI. We have reached negative MACD. As for the 4 hour chart, we still on positive MACD. We see a divergence over on Wednesday action, and we're currently resting on the 200 moving average. We may possibly break that support soon. As for the daily chart, we are also slowly approaching to negative daily MACD. We still see sideways price action for silver. Again, we'll still use the 200-day moving average acting as our support, and that is around the price of I would say $16.97. So that'll be our first immediate support. And if we were to reverse higher, the next possible resistance will be where we made back in June 1st at the price of $18.84. And if we were to move up higher to hit that resistance level, that price movement to the upside is roughly around 7.2%. And to the downside, that price movement to the downside is roughly around 2.9%. So now let's head to the day-by-day probability model for silver. So as we progress to the 7th day, we have a 20% chance for silver to climb between 4.5% to 9%. And to the downside, we have a 60% chance for silver to fall between 0 to negative 4.5%. And to the extreme case, to the downside, we have a 20% chance between negative 4.5% to negative 9%. So now let's examine the day-by-day forecast for silver futures. So we have 1 day out, that will be a Thursday, and 2 days out will be a Friday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue line is our current trend, and overlapping it happens to be the best match. So we have our current trend right here, and below the trend that we found on the line graph. And that dates back to July 10th to October 5th, 2019, or 2009, I should say. So let's begin comparing both trends. So we start off at the middle Bollinger Band, see sideways action, and then we proceeded to touch the upper Bollinger Band, revert back to the middle Bollinger Band, and then once more attempt to touch the upper band. And on the trend in question, we start off at the middle Bollinger Band, proceed to see sideways action, touch the upper Bollinger Band, reverted back to the mean to the middle band, and then once more touch the upper band. So what we have here is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points on the current trend, so there's reason to believe the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So the model, again, we just examined was July 10th to October 5th, 2009. Back then, silver was up around 6.8%. And if we head back to the day-by-day probability model, that coincides with this standard deviation of 20% chance between 4.5 to 9% higher in next coming days. Let's examine closer on the technical performance of each model. And on the current trend that we're in, we're down 5% from monthly high, up 20% from monthly low, down 60 basis points from 10 simple moving average, down 1.3% from 20-day simple moving average, and up 5.6% from 50-day simple moving average. And now let's examine the trend that we just found. Back then it was down 4.6% from monthly high, up 22% from monthly low, up 1.4% from 10 simple moving average, up 15 basis points from 20-day simple moving average, and up 8.7% from 50-day simple moving average. So among the two trends, there are technical differences. One is in the 10 simple moving average. Back then, it was up 1.4% from 10 simple moving average. Compare that to the current trend, which is down 60 basis points. And also the 20-day simple moving average. Back then, it was up 15 basis points. Compare that to the current trend, which is down 1.3%. So again, these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.